Hello, welcome to the weekend stock market review, May 21st, 2023. All right, let me double check YouTube to make sure everything is up and running properly. Looking good. Okay, right off the bat, let's go to KRE. I still hold all my position. I'm not adding. I'm not doing anything. I would like to add, but I want to see confirmation that the stop raising rate, that's what the regional banks need to stabilize. Otherwise, if the Fed keep raising rate, bonds will keep going lower. Okay, for those that don't understand how it works, when rates go up, bond value go down. Right? That's just the way it works. If you put out a piece of pen and pencil and do the math, you'll understand why. Um, so until that point happened, I think KRE and the big banks is going to go sideways. And if the Fed, of course, raise rate, then you're going to see another revisit of the law. That's just the way it is. I like the risk reward here for KRE. Now, the one thing that you got to keep in mind is the longer KRE stay down here, going into the fall, yes, I'm talking way forward, 3 months, 4 months, then you're going to face with what? Tax loss selling in October, right? So there's a lot of, I believe there's a lot of opportunities to buy KRE down here in the next 3 to 4 months. No rush, okay? The easy money will be made with them somewhere down the road where you can buy down here and looking at 20-30% return in 2024. But for now, I'm fine with my position here. Same thing with Bank of America. I have not add. That was no reason to. But we are at a key point here where there could be a breakout over the 50. Would I be selling at up here between 31 and the 100 MA? Absolutely, right? So as much as I like Bank of America, that would be an easy spot to trim probably 1/3 of my position. It will be in money. Okay, anything above 30.3-ish is my break even. It's yeah, I'll take some profit. Goldman Sachs. I do like to sell put spread down here, way below, of course. Um, Anything 315, 310 below, I like, right? So if it go red below the 50 MA, I will look to sell 310, 300 put spread kind of thing. These days, I sell put spread really tight spread, really tight. By tight, I mean, if I was selling, say, 315, I would sell 315, 310. If I was selling 310, I would be selling 310, 305. So when I say put spread, without giving you both numbers, just know that most of the time, especially on stock that are over 250, $300, I'm doing one level, usually $5 apart. Okay, so yeah, sometimes one level below is $2.50, but I'm not gonna sell it that tight unless it is um, extremely volatile stock that I want tighter protection. So there are situations where I would write a spread or sell a spread where it is a $2.50 difference. There are occasions, and I will point that out later in this video. So for me, what confused a lot of people is how TLT behave. Um, if you look at how the regional banks behave, you would have suspect that TLT is doing better, right? Because the regional banks have come off the bottom, as if the Fed is pausing. But TLT is acting as if the Fed is not done, right? It is that simple. Stop talking about how the debt ceiling has anything to do with this. It has nothing to do with TLT. Let me repeat one more time for those that are hard to listen and understand. If the Fed is done with raising rate, but the politicians are not done jawboning about the debt ceilings, and we go into default. Okay, that's the there's no way that will happen. But if that is the situation, and the country come to a halt as far as federal spending and millions of federal workers don't have paychecks and Social Security go into complete chaos, do you think we are not going to a deep recession at that point? Think about it. Let me repeat what I just said. If the Fed, if the politician can't get the debt ceiling raised and we go into immediate recession, do you think bond is not going to crash rate as far as the rate, because we go into immediate recession? And it's just like the COVID lockdown, right? Immediately the country go into a lockdown with COVID, bond rate go crashing, TOT spiked. So why would anyone think that TOT would be going like this, behave like this? So the way TOT behave, it has more to do with the economic data. Let me repeat so that you stop talking about how the debt ceiling has anything to do with this. It is about the economic data. For those hard-headed that can't look at the data, look at the data. The economic data, if you look at the face value without digging deeper into the data, it looks strong. In fact, if you pay attention, last week, two Fed officials came out and jawboning the market that they're not done. Two. Okay, so there's a lot of things that cause TOT to behave this way, and it has nothing to do with politicians. Stop talking about that, okay? Because it's stupid. It's literally stupid to even think that it has something to do with a politician. Now, could I be wrong? Call me stupid. Please do. Now, does it mean that if the politician come back tomorrow and say, we got a debt deal done, and then TLT spike, and then bond rate fall, and it has anything to do with it? Who knows? Okay, can it happen? Yes, but does it has any kind of logic, reasoning behind it? No. Let me have closure to this matter. The market does not behave logically. Okay, it doesn't. Often it behaves irrational and emotional. That's what the market does. That's how the market has always do it. That's why technical analysis is used with more usefulness for those that understand that the way things move more on emotional reaction than logic. Okay, so this, if you try to apply the logic to what's going on with the market, often you can be on the wrong side of the trade longer than you want. Okay, I'm guilty of that. I'm guilty of operating on logic. And have I been wrong? Plenty of time. Plenty of time. So it's not, so that's why I use TA. I use TA to help me remove myself from thinking too logically with everything, because I know the market is more often irrational and move on emotional than anything else. So for me right now, there is a fear that the Fed is not done. The market focus on certain things where the Fed, that's where the irrational behavior is right now with this. If KRE is bouncing as if the Fed is done, but then TOT is falling as if the Fed is not done, that's where the disconnect is. Okay, it has nothing to do with the politician. Nothing. But you should be scared of how TOT is also not impacting big tech. Usually, for going back 2 years, I talk about this. When TOT is down, rates up, NASDAQ, QQQ down. That has worked until this year. Okay, if you go back, look at the last since December. Okay, look, Nasdaq big bounce. Okay, big bounce compared to TOT. Okay, TOT has not done well. Okay, if anything, it is trending back to the low of March. And look, TOT in the 1st of March was down at 99. We are not that far away. And let's go back to QQQ, where the Q is. Look, March 1st, right there, right there, right? That's one huge disconnect right there, where TOT is near that point, but yet the Nasdaq is more. Let me repeat, more than 12% higher. All right, so be careful with QQQ because the VIX is once again almost flashing 52-week low. Crazy. This has been one crazy market for sure. It's a frustrating market for many people because there's so many disconnect behaviors as far as what the VIX is doing, what the data is showing, what the Fed's doing, what the bond is doing. It's crazy. It's definitely one of the tougher trading environment that I can remember, at least for me. Okay, being an active trader is not an easy spot to be because you have so many flashing warning signs, yet Nasdaq is breaking out, right? So I don't know. Be careful. The only thing I can tell you is if you're a trader, don't get overexposed to anything. Buy some protection. Trade small, trade quick, be in and out, take your profit quick. There's a good friend told me yesterday as I exchanged texting with him. He said, this is the market where you take the single, you take the double. There is no home run, there is no triple, there is no grand slam. You take the single as often as you can get it. All right? Take the quick profit. Doesn't matter if it's long or short, take it quick. Don't sit around, don't overstay your welcome because everything looked dicey, as he said it, dicey. All right, so VIX, of course, VXX. I had 6 spread on VXX last week. 336, 335. I closed the 336 middle of the day yesterday for a small loss, but the 335 that expired worthless more than balance out. I think net I might even make enough money to buy a cup of coffee. It was a very small position. I don't really worry about that. I did write some spread for this week, 35 and 34, so one level lower. A little protection, not big. Okay, so let me go to, before I go, TLT. I did have, it was my biggest spreads loss of the week. It's the only spread loss of the week. What I did was I did let a couple puts assign at 102, and then I did roll. Was it 17? Yeah, no, 14. 14 spread down below to the 100 level for this week, and they will live to fight another week. So that's the play on TLT. Now, talking about dicey play, let me tell you what I did with going into Wednesday last week. I had four positions. I wrote put spread on 17 different stocks, which is the most ever. Almost 100 spreads. That's crazy, right? 100 spreads was 90 something spread total. If you add in all the cover calls that I wrote, then I had over 100 option position. Now, over 100 option position, but 17 stocks total. So I had 17 stocks that I had to follow closely. 4 was in danger: TOT, VXX, Amgen, and then FV. So let's talk about Amgen. Okay, here's um, a lesson. So of course, VXX turned out to be a mute trade. TOT was a money losing. Let me tell you what happened to my Amgen, which I like. Okay, I like Amgen here, but for those that follow me, for most of last week, I talked about how I have 225, 220 spread, tight $5 spread, right? And I also have spread below. I also sell some 217.5, 210. Those are bigger gap, but I was not worried about them. But on this day, okay, so it started to look real ugly Wednesday. And those three, I had 3 spreads here. I was staring at $1,200 in damage, roughly, for 3, because like I said, it was 225, 220 spread, right? So roughly net, I was looking at something that was $1,100 to $1,200 in damage if I do nothing, if Amgen stay down here. So I waited patiently to see Amgen rise. Okay, so on that day, I sat still. I let the stock recover after the first 30 minutes. And when it was over 225, I closed out the position at a loss. Net, I closed out both the long and the short 225, 220 at a loss of roughly $500. Okay, I was staring at something more than twice on that. Now, the good thing about what I did, which I fully planned to do, was not roll, but what I did was I closed the position at a loss. I sold more spread below to cover that loss that expired Friday. So what I did was I closed 3 225 spread, and I sold 8 222.5 spread. 8. Okay, so it was dicey. It was a dicey play, but I was ready to take those losses as well, and then roll it down to 220 next week. That's this is about as big of a gamble that I did over the past 2 years selling spreads. Okay, so and it turned out to be the good play, because as you can see, Amgen finished here above 222.5. So net, I actually made decent profit with Amgen with those 8 spread, as well as the 7 spread below that expired worthless. So that was the right play. If I didn't do anything, I would have lost probably, well, easily $500 or more on that one stock right there on Amgen. Okay, so for now, I have going into this week, I have 220 spread, 217.5 spread. So I'm ready to go lower, but not a lot. Okay, I have I think 4 good spread right there for now. Now the other one, AppFi. I'm going to spend most of this weekend review talking about managing errors. Okay, so that's why I'm going to great detail on my play Friday, so you understand. AppV, same thing. Now, on this ugly day, on Wednesday, I had, once again, 3 143. My spread here was 143, 140. So I had 3 going. So on this ugly day, of course, it didn't look very good. Okay, at one point, I was once again down about 650, $700 on the three puts. I did the same thing. I wait for it to bounce back to 143, which it did, close it out, and sell 140, 137 put spread below. Now, in hindsight, compared to Amgen, if I did nothing, if I do nothing, those three put spread would have done just fine, and I made money. But net net, I still made money. It was a precaution move that turned out not needed, but I'm glad I did it. It was a good exercise last Wednesday to have to go through that with both AbbVie and Amgen. Okay, so that's going forward. Just know that that's the usual play that I do if I have a spread in red. I try to do close it out and do something bigger below it to recoup. Just my way. I'm not saying that's the right way. I don't let things assign that often. All right, let's go on to other play. Lockheed Martin. Once again, let me repeat. Lockheed Martin struggle here because of the debt ceiling, the budget, right? We all know money got to be cut somewhere. Until we know for sure where, there are people that worry that it's going to come out of defense, which is fine. Selling, to me, selling 445, 450, 440, 435 put spread is just fine with me. Plenty of money to be made there. I do own some share that is underwater, which is fine. I do believe once the budget is settled, you will see a rise back to the 500 level, and I will sell with great profit there on those shares. But for now, the play is selling put spread at 445 at the highest. I rather do 440, 435, safer. Let's go quickly through some healthcare. ELV, same thing. I saw put spread hand over fist on this move, right? On Wednesday and Thursday, I sold 3 or 4, 440, 435 put spread. I have a couple already lined up for this Friday as well. That's the area, right? We see it. 1, 2, 3, 4, almost there. So I don't have a lot. I have I think 3 put spread right now down there. And if it come down closer or down there, then I sell. I will step in and sell, say, 430, 425. If ELV come down to the 440-ish level, trust me, the put spread at 425, 420 will have plenty of juice down there. So that's what I do. Okay, I sell some puts before the end of the week for next week, and then during the week, if things get worse, I step into it. For those that hear me talk or hear me write, step into it, that means that I sell more puts below at bigger quantity. UNH, same thing here, but it did fill the gap. Okay, so be careful there. So what I did was I sold spread but below the gap. 465 was the highest that I sold. If it come down, to me, 460, 455 spread is a really decent area with decent protection because you get the reference low. You get all kind of stuff to protect you. But can it go down to 450? Yes. Okay. The lowest spread I would sell would be, say, 445, 440. Should there is a crash further. I also sold one Cigna at the gap fill, right down here, just above. It was just too tight, but I'm okay to sell. I sold a 245, 240 spread down here for lunch money. Nothing big, but I will step into it should we fail the 20 MA and retrace. That can happen. Okay, right now it's basing, holding, but if we have a down market, I wouldn't be shocked to see Cigna give back all the way to the gap fill. It's possible. Let's take a look at Pharma. Still hold my Eli Lilly. Nothing to do here. Nothing. Not adding. Not selling anything. Not doing. I was looking at call spread, a bull call spread. I might do that on a pullback. I might, but until it pull back further into the 20 MA, I'm not doing anything. I'm just holding my share. Pfizer, nothing to do here. Okay, I'm not adding, not selling. It need to go sideways. It need to go sideways. All right. So the last time it got to the 20, big rejection. So it need to go sideways. It likely will go sideways. Definitely one of the dog in my portfolio. JSK, I did buy back what I sold right here. Okay, I've been waiting. So I had my order in to add all for the past 2 weeks, right? And then on this ugly day, I said, I want to take it off. I didn't like this. So luckily, that's what I did. It did wick down and touch it, and then I placed an order to buy down here, and it triggered, right? So the next day, it came crashing down. So I bought back some of the share that I sold up here. Now, where would I buy more? I would not like to see it revisit the 200-day moving average, but for now, I'm not adding more. If it get back over the 100 MA and hold, I might add there, but otherwise, I'm more inclined to set a stop. Okay, what's going to happen is if we have a good day in GSK and it bounce over the 100 MA, I would then look to set a stop below so that I protect my gain. All right, because it's too much gain, or there was a lot of gain up here, but now a lot of that gain was eroded on this big gap down. So yeah, I'm not happy with that. Not happy with that at all. Let's see, any more pharma that's worth talking about. J&J, of course, it filled the gap as I thought it would, and it did. I advise people to take your profit here, buy back at the gap, and if you did, the question is what now, right? For sure, you should look to trim into 162. Yeah, that's, if you want to add more down here, to me the better play is to sell put spread if there is any juice, 155, 152. Okay, on stock like this, I don't sell $5 gap. That's too much. I do $3 gap, like 155, 152 would be the gap spread I would sell if there is juice. But would I outright buy share at 155? The answer is yes. All right, let's move on to FANG, Meta. It's getting dicey. It's getting dicey. Okay, let's take a look. Go back 2 years. All right. First of all, it is at the area of resistance. What now? Can it fill the gap? That would be crazy, right? It'd be nice. I don't think those whole Meta would complain at all. Can it happen? I don't know. I think it can happen, but not right now, not this week, because we have, maybe next earning, maybe going into next quarter earning, we will get there. After all, it has been 2 gap up. See, the last 3 earnings ago, that was the last ugly Meta earning, right? And then they reverse course, start talking about efficiency, lay off people, and off we go. And lay off more people, more efficiency, off we go. Can the trend continue next quarter? Yes. But I think we need that kind of catalyst into next earning to make that kind of bigger move. That's a huge move, okay? To close that gap is big. It's big, okay? You're talking 15% plus kind of move. So yeah, I don't expect it to happen right now in the next week. No, I just don't see it, okay? Do not see it. So for me, I'm not doing anything. I'm selling. I did sell a couple put spread last week that expired worthless. So I'm just gonna take the easy, cheap money below. Google, I am all out. I'm out. Okay, I'm out. Except for my son account. My son account still have 50 share, which he will enjoy making money. But I am out. I would, do put spread below on a pullback, further pullback, where gap fill. Okay, down there. But for now, if you have Google, sell cover calls. If you buy into Google on the chase, at least wait until a red day, right? There's no need to buy on green. Wait for a bigger pullback into where? I mean, to me, down here, 117, right? Into the channel low. If you want to be patient, just be patient. If you want to even take a bigger risk, sell a put spread at 117. Do 117, 113. Something like that, where you use the gap fill as your line in the sand, kind of. But do something like that. Don't buy share up here. Sell put spread down here so that in case there's a pullback, at least you're getting the share $5 below. Would you rather buy the share outright $5 below? I would. No need to chase it up here. Microsoft, same thing. No need to chase it. It's at the level of resistance. Never underestimate irrational FOMO into what's hot. It's hot. It was hot. It stay hot. More hotter than I can even imagine. Okay, irrational behavior can outlast logic and your money. So would I chase it here? Heck no. Heck no. Okay, Tesla. I would sell put spread, but not right now. Not when it's 180. On pullback, which I have, every time there's a pullback into the 20 MA, yeah, I will sell put spread below. Where I was selling last week, I sold 155, 150, a couple, and I do the same. I mean, do I think there is a chance that Tesla will fill the gap down here? Yes, I do. But it has more to do with the overall market. If there's a pullback in the NASDAQ, for whatever reason, because TLT rate go crazy, then yeah, can I see Tesla go back to fill the gap? Yeah, it's possible. No need to rush anything, okay? No need. Absolutely no need to. I did sell a couple of put spread on JBXT, and I will likely do the same last week into this week. I would. I like JBXT spread down here in the 150, okay? If I can sell 150, 145, 150, yeah, I like that down here, okay? The highest I sold last week was 160. I did 160, 155. Right now, if we have further weakness, then I do the same thing, or at least 155, because look, the low is 153.92. I'm using that as my protection. So anytime that I see further pullback and the 155, 150 spread have enough juice, you bet I'm doing that, okay? You bet. I saw a spread 2 weeks ago on LH at 210, 210, 200, that expired worthless. But I hate doing monthly option. Absolutely hate it. That's way too far away. I outright buy DGX, but if you don't have exposure to LH, I think on pullback into 212, 210 is a decent area. Sure, if you buy some on a pullback, for sure, look to buy at the 200 level, right? To me, that's, if it come down enough where the 200, 195 spread start to have juice, then I might do that, okay? Now I bought, of course, DGX. I'm not adding, but I did look to sell put spread. It's no juice, okay? DGX had terrible option action, terrible. I mean, even if I try to sell 125, 120 spread, it's terrible. The risk reward is not there, especially when you have to wait literally a month. No, so owning share is the only way to play DGX, and I have a decent amount, well, not a lot, but enough for me to have exposure there, and I do plan to add a lot more. So what I would do is I've been watching all week to set my stop. Okay, so for now, I think a decent spot to put a stop is, of course, low of day Thursday, and then put a buy order in maybe at least $1 lower, so that, you know, hey, 100 share, I'd rather not give away $100. All right, so for now, I don't have a stop yet, but I'm thinking, depending on what it's gonna do this week, to set a stop so that I can buy it back lower. Let's end this chat with some big bucks, okay? TGT. I did sell a bunch of put spread on TGT, and they did well. I also sold a couple for this week, which I am less confident about. The highest one is 149. So I have a spread at 149, but I have some at 147, 146, a whole bunch, okay? By a whole bunch, I mean 4, not a lot, not yet, but yeah, it was an ugly earning thing. The shoplifting, the theft, 500 million is insane. It's insane that Target can lose 2 billion through shoplifting of merchandise this year. They're losing 500 million at the clip of 500 million. It's insane, absolutely insane. Walmart, doesn't matter if you have good earning, right? I said time to go last week. Well, it's time to go, and it's not time to get back in. Time to get back in is do a spread at 145. Okay, 145, 140. That's the spot. Would I outright buy the share? I would, but it had to be, you know, down here into below 140, up here. Okay, between 146 and 145, I would consider buying shares outright. But for me, the better play is to sell put spread down here. I didn't like Walmart up here. Still don't like it even on the pullback. But nah. Costco, same thing. You heard me talk for weeks. There is no reason to be in it. Earning is coming this week, so if you want to play the put spread, you can. You can wait for the big reaction on earning day to sell some put action, call action, whatever. There'll be plenty of juice when Costco release earning, but it's coming. I just don't see any reason to stay long into earning here. I have nothing, no exposure. I wait until earning to sell some spread actions where I don't know yet. It's gonna be below, okay, below where it is now, perhaps for 60. Maybe that's too far, but we'll see. For now, I have nothing. Oh, last one before I go. Now, the one spread position that I had go into last week that came out okay was my 485 480 OTA spread. I sold two, just two, but it was dicey. That's why I only have two. You know, I fear that OTA can have a very violent move. Okay, because it has happened before. For those that follow me for a while, you know OTA is the one bear put spread that I didn't win. I don't do a lot of bear put spread, but I did with Texas Instrument and win every time. And I lost on OTA. The irrational behavior can outlast my money. Okay, so that's what happened when OTA was up here back in February. I thought that was lunacy to see OTA in the 525 range. So I did a put spread, bear spread at 495, 485. And I was wrong, okay? Wrong. OTA never get below 495. In fact, it run 10% higher. That's insane. Absolutely lunacy. That was a time, okay? I was too busy with other things and I didn't redo another put spread there. But boy, talking about timing, right? That would have been a killer of a bear put spread. Anyhow, earnings is coming. Earnings is coming this week. Of course, the weakness in OTA is the consumer discretionary, right? You have Nike, you have Foot Locker, you have a lot of discretionary stocks not doing well. So OTA sell off, it ran up way too hot. This is insane. It's insane. Look, since December. Look, December 31st, the stock was here. 460-ish. Okay? 462 right there. It opened the year at 462. You can do the math, right? Insane. Insane 3 months, 4 months, 5 months. Insane. So for this week, I sold 3 puts so far. And I'm as low as I sold them, I'm not comfortable. The highest spread I had is 465. Yeah, even then, I'm not comfortable with that because sure, I get the 200-day moving average, and I think if OTA come out with some dire earning and warning and guidance, we can revisit that in a hurry. Now, I sold as low as 425. Yeah, that's how crazy. So I sold one at 465. I sold one at 450. And then I saw another spread at 425, 420. That is insane low, but that's the only one that I feel comfortable with, okay? Because I'm using the channel low here, potentially as the last line of defense. Look, OTA can touch channel high and channel low in 2 weeks, okay? Look, it happened before. Can we touch this, at least this 454? Absolutely. On a bad earning report and guidance, we can touch that in a hurry. So that is why I only sold one up there, one down here, and one way down here. So I had to be prepared and be ready to step into it down here should this one is in trouble. So we'll see. But that's my danger zone coming into this week. Otherwise, I think most of my spread is pretty decent with Lockheed Martin, ELV, even Amgen. I have Amgen FV spread for this Friday as well, way below, way below. But you never know, you know. Even when I sell things way below, which has been the strategy for the past month, every week I still have a few positions in danger. So I'm glad I revised my strategy on selling put spread to sell things way below, more in quantity than in big credits. You know, before a year ago, I was selling things a lot closer for a bigger credit. Often it's more than $1 spread. But now I'm just like, you know, I'd rather do a spread way below with a tighter spread and get 40 cents, 50 cents credit instead of trying to get $1.50, $2 credit and then running into all kind of trouble like I did last year. I'm learning, revising strategy as I go along. But that's it for this week. Thank you for watching. Let's see how the economic data will come out this week and see how it will impact TOT. Okay, that's the key. We need to see that to help TOT, and then we also need the politicians to come up with a budget to help Lockheed Martin. Thank you for watching. Bye-bye.